Good morning, everyone. Today is Tuesday, May the 9th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're going to take a look at the futures first. They get to tell us a little bit about how big money is positioning and what they're using to speculate. Read an interesting article about someone suggesting that zero DTEs were the ticking time bomb, and frankly, anything that's got a lot of power that's used in the wrong way is going to be troublesome. But neither here nor there. What we are looking at is Asia markets, particularly the Hong Kong markets, were down savagely, more than 2%. And we are sort of sitting sideways. We are a little bit above the low of the prior day. This area at 41.33, I think, is a really nice support zone, but I haven't seen any buyers really come in until maybe just a moment ago. We are waiting on the CPI tomorrow. So could we have another sideways day? Yes. So here's what happened in the overnight. We had a liquidation break from 41.44, just ran a ton of stops. So there's single prints from 39 to 44, and so we probably will go up to that 44 to 46 area, my suspicion, and then potentially fade. I do believe that we stay sideways. We really are expanding in a megaphony kind of way, but if we lose 41.32, then we get to look at 41.18 to 41.13, and then 40.99 to 40.78. On the top side, if we get up above 41.54, then we'll go to 41.64 and then 41.79. That's my thought. Taking a look at the Qs, or the NQ in particular, we've got a little bit of sideways action. A lot of big names got upgraded, right? And so we're looking for that to hold, but in the grand scheme, we really have come right down into the spaces that we were looking at yesterday. 13,288, really the floor that they're trying to hold. Pullbacks that hold the pre-market low are going to bounce us back into the range above to 1330 and some change. So we could stay chopping around in maybe a 50-60 point range in the chart overall. If we break 13,250, actually 13,270, we'll head to 13,250 and then potentially 13,212. Quant stats today are showing a really choppy and mixed market, with opportunities for quite a bit of sloshing about and big liquidation breaks on either side, right? Because we are moving from a narrow range formation. Take a look at this. All of this is narrow range trading in general. And even though we tried to expand, what this chart here is doing is high, higher high, low, lower low, and so that is a megaphone. So it could expand up to the north, it could expand down to the south. Where should the traders hold? As long as they hold above the pre-market low, which is 13,543, and we are looking at the YM here, we should be able to head up into 33,733. If we lose 33,500, then we get down to 33,400 and then maybe 33,180. I'm not really sure that kind of movement is going to happen today. Today feels very, very sideways and choppy, just like yesterday. You ought to be able to position with an iron condor as soon as we figure out what's going on with the ranges per se. So that being said, we have already got some exposure for today from a short call spread perspective that ought to be just fine. And here in the RTY, we're looking at heavy congestion. So what do we need to hold? 1750. If we lose 1750, 1737 is next. If we breach 1760, 1770 is next. Things are super sideways, super sideways in terms of this particular chart. Let's take a look at gold. Gold is chopping about. We just had the dollar make a little bit of a spike. Actually, it was a pretty good spike. Holy smokes. And also Boeing. Not sure why that's spiking like that. But above the 2027 area, the chart is going to try and get into 2034. If we cannot hold the opening tick of yesterday, which was 2022, we should come back into 2016 to 2004. That's what I'm looking at right there. Finally, oil. We'll take a look at oil. Oil continues to fade. It's just having a ton of trouble coming off of its ranges. I think it's still sideways because there is this idea that people believe we've got some kind of recession in the works, and that is going to affect it. So where do the buyers get excited about trading again? I think if they get above the 72.87 area, that's the opening tick of the chart today, buyers are going to try and get it into 74. If we lose the pre-market low, that's 72, we should go to 71.50 and then potentially once more into 69.70. I am looking for a double bottoming formation in this chart. Okay, that is what I am looking for. All right, let's get ourselves over to the ETFs.